This is Jonathan Aceves with Maybaum Commercial, where we help business leaders make wise commercial real estate decisions. And today we're going to be discussing sale leasebacks. There are four primary reasons why a business owner might want to consider a sale leaseback. The first is financing. With a sale leaseback, you can tap into 100% of the equity in your building. A bank may only allow you to tap into 70 or 80% of the value of an asset. Also, the value that an investor might put on an asset might be greater than the way that a bank would see the value of the building. An investor is looking at the return on a 10 or 15-year lease and at a discount rate, whereas a bank might see the building as a shell. You know, what happens if the tenant moves out? So the valuation often on a sale leaseback is higher than the what an appraiser might put on the building. So for example, a medical office building probably worth $150 a foot might sell for over $200 on a sale leaseback, whereas an appraiser probably wouldn't put that kind of a valuation on the building. The second reason would be improved returns. Oftentimes, if a business is growing quickly, the returns that the business owner is earning on the business, on the principal business, is a lot higher than the returns from the owning the real estate. And often, redeploying the capital that's invested in the equity that's in that building into the primary business earns more money. Balance sheet improvements, especially for larger companies and maybe companies that are trying to deal with their debt, moving assets from one side of the balance sheet to the other. So essentially, when you sell a building, especially if it has debt, you remove the liability. Now you've got a current asset, so you change the current ratio, the quick ratio. Oftentimes that can create opportunities for the company to qualify for debt or for operating capital. Finally, exit and repositioning. This is especially true for partnerships. Say if you've got a senior partner who's looking to exit and he wants to break the business apart from the real estate, and a sale leaseback on the real estate is the best way to get the most money for the real estate. That might be part of the exit plan. Also, repositioning. If a company knows that they want to exit a given market over a couple of years, they can perform a sale leaseback, free up some capital, and then start a 5-year or 10-year plan to exit that market or to move to a new market. So thanks for watching. As always, this is Jonathan Aceves with Maybaum Commercial, helping business leaders make wise commercial real estate decisions. Please comment below, share this with friends, and again, thanks for watching.